Welcome back to ARC PDX. Budgeting is a great tool to help you save money, but you can open up even more financial opportunities by having good credit. People with good credit can get easier approval for housing, lower insurance costs, and lower interest rates. So joining us this morning to talk about how to build good credit is SELCO Credit Union Senior Branch Manager Amanda Denbaugh and Branch Manager Angela Laurie. Thank you both so much for being here on ARC PDX this morning.
Yeah, thanks for having us.
Of course. Okay, so first, let's just start with the basics in case people are so confused about all of this. What is a credit report and what is that used for?
Yeah, that's a great place to start. So a credit report, it's a summary of your credit history. So it includes the type of credit accounts you've had and have, your payment history with those lenders, and other information like credit limits. Lenders use that information, those reports, to make a decision on whether or not they're going to loan you money. Like prospective employers, landlords, insurance companies, and utility companies, they also use these reports sometimes to help them make a decision as well.
Wow, I didn't realize utility companies use them too. That's interesting. Okay, let's talk about the score. So what is your credit score? Why is it important? And how is it calculated?
Sure. So a credit score is a number typically between 300 and 850, and it represents the likelihood that you'll pay your bills on time. Your score is one of the things that creditors consider when deciding whether to approve you for a new loan or not. It can also impact other loan terms like the interest rate that you pay and how long you have to pay the loan. There's no magic number that really guarantees whether you'll be approved or not, but higher scores demonstrate a responsible past credit behavior, and lower scores can indicate that you maybe have struggled with money management or had difficult financial situations in the past. The way your score is calculated is based on several credit factors that really all of the same credit reporting agencies use. Things like your payment history, the amount of credit that you're using versus the total available credit, the different types of credit on your credit report, the length of credit history, and also the number of inquiries. So there's a lot of factors that go into calculating that score.
Okay, so what steps can you take to improve your credit?
Yeah, first and foremost, the most important thing you can do is just make your payments on time. So it'll have the biggest impact on your score long term. And then keeping your credit card balances low. I don't know if a lot of people really know this, but it has a really quick impact on your credit score. So if you're maxing out your cards, you can see a really quick dive. So one of the easiest and fastest way is to pay those down. And then don't close your old accounts. You might think that that's smart and might boost your score, but actually hurts it because they're looking at the length of your credit history. And then limiting new credit applications. I know we all receive so many different offers and mailers, but really only being selective and choosing the ones that you really need would also help. The credit union works with a lot of people to help improve their credit, so feel free to reach out to your local credit union for tips on building your credit score. They have all the experts available to help you with that.
Great. Where should people be looking for their credit score, their credit report? I mean, you hear like the rumor, I think it's a rumor that like if the more you check it, the lower your score gets. What's with that, and where should you be getting this information?
Great question. And that is a myth that's out there. So we recommend that people review their credit report regularly. You can get a free copy of your credit report from all three of the major credit reporting agencies through a website that's annualcreditreport.com. Previously, you could only review your reports once every 12 months for free, but they've actually made a change recently, and now you can view your report as often as once a week.
Oh, okay. Really cool. Can you get incorrect information removed from your credit report if you see something on there that's not right?
You can. So you can dispute that directly through the credit reporting agencies or through the website annualcreditreport.com. It's super easy. You just notify the Bureau of what's inaccurate, and then they kind of take it from there. The creditor has about 30 days to look into the dispute, report its findings, and if the information being reported is indeed incorrect, it'll be updated or removed completely.
All right, cool. And if people ever say that they've frozen their credit, what does that mean?
Yeah, so a freeze on your credit prevents access to your credit reports to open new accounts. Consumers often freeze their credit if they have concerns about identity theft or about fraudulent accounts being opened in their name. It's a good security measure that's really easy to add and really easy to remove when you do want to apply for credit.
Okay, all right. This was all very helpful, easy to understand information as well, at a time when I think a lot of us are kind of racking up that credit card debt a little bit too much. So very important. Amanda and Angela, thank you both so much for your time.
Thank you.
And we create a lot of valuable content here on ARC PDX. If you'd like to see it again or share it with your friends, point your phone's camera at the QR code on your screen, and that will take you right to the ARC PDX YouTube page.